Hello everyone, my name is Lachlan. I write for Monday Morning and I'm also an analyst on Exponential Stock Investor. Today I've got the cheetah print mug, so let's dive into it. Today's article is about, the incentive out there for these large firms to manipulate the market, and I'm particularly talking about these large cap companies. So the NASDAQ had a massive rally recently, and part of that was revealed to be due to SoftBank's option buying. So you can read this article on the Financial Times. It's a good read. It shows you, the kind of manipulation that goes on out there with these large cap companies. And there's also this morning a headline about JP Morgan paying almost $1 billion out to the CFTC, which is the Commodities Futures Trading Commission. Now, they've basically been doing this for 8 years, between 2008 and 2016, and they only recently copped this fine. But I guess the point is that small caps have a certain element of purity to them. Now, they're certainly riskier, more volatile, I'm obliged to say that. But at the same time, since they're smaller companies, there's less incentive for manipulation to occur. I'm not saying it doesn't happen, and you should definitely look at director remuneration and governance when you are thinking of investing in small caps, because that's certainly a risk. But what I'm saying is that the big dogs of the financial world frequently do dodgies, and that's been proven with Enron, then SoftBank, and now JP Morgan. So I guess one of the things I really want to show you is the performance of the XEC. So that's the Emerging Companies Index on the ASX. It's actually got a positive 1-year return, and the companies that comprise this are right here. So you've got De Grey Mining, which you may have heard of, Redbubble, Sezzle, Bellevue Gold, and I'll just show you what's happening on the charts for a few of these companies to give you a sense of why the XEC is outperforming the XJO, which is the orange line here, and the XSO, which is the small ordinaries. So XJO is ASX 200, by the way. So, and the small ordinaries is the companies between the ASX 200 and the ASX 300, so generally the small cap companies. Now, the XEC sort of defines itself as a micro cap index, and I just question whether or not some of these companies are micro caps or micro caps now. So I'll bring your attention to the Bellevue Gold chart, big run. That's one of the companies on the XEC. Then you've got Redbubble, which you may be familiar with. It's one of the companies in our 4 small caps report, which you can download in the link below. And so, yeah, absolutely massive run from April or so. Then you've got another small cap star. So this is De Grey Mining. They hit upon a big discovery of gold, and their share price has gone absolutely berserk. So given that these companies are a major factor for XEC, you can sort of grasp why XEC is doing quite well compared to the XSO or the XJO. And finally, I would just say that small caps, you need to know what to look for. And we've got a sort of methodology in Exponential Stock Investor for selecting small caps. And I'd really encourage you to learn more about that. And I just say, keep your eyes peeled for this emerging story of small caps outperforming the big indices. It's been going on for a little while now, and there are 2 views on this. One is that it's just retail investors piling into speculation, but the other perspective is that these companies are genuinely exciting. They have new ideas, new products, or they're just simply better run. So I'd encourage you to read the article. You'll learn a bit more about small caps, and yeah, I hope you have a safe weekend, and I'll speak to you soon. Have a good one.